Hey everyone, welcome in to another daily editorial. Here on the KE Report, we're chatting with Jordan Roy-Byrne. We're going to be covering the strong move higher in precious metals, gold recently at all-time highs, silver volatile around 31 but still holding above that 30 level, and the stocks moving higher. GDX, GDXJ, those are also looking strong in what seems to be a pretty strong market environment across the board. Jordan is the founder and editor of the Daily Gold. Jordan, let's start off with gold. Most recently, earlier today, was up as high as 24.88. It's been a very strong start to the second half of the year for pretty much all precious metals and the underlying stocks. Jordan, what can we forecast here in terms of upside targets now that gold is in this rarefied all-time high territory?
Hey, Corey. Yeah, gold it appears to be breaking out from a bull flag pattern, although it's not. There's something about it that leaves me a little bit of doubt, but nevertheless, you can call it a bull flag pattern. And measuring it, I think there's a target of like around 2720, and that's also a strong Fibonacci level. So that's a level that I'm looking at. Now, if you say the flag began in the middle of February, which is not wrong, I mean it's a good possibility. That gives you a potential measured upside target of around 2,900. So depending on how you measure the cup and handle pattern, you could get 2,900 or 3,000. But coming back, I would say the next target I'm looking at is probably 2720 or so.
Well, Jordan, how are you looking at the gold stocks? Because GDX broke out above 39 earlier this week, and it was at a 52-week high. Miners kind of getting hit pretty hard today overall, but in general, pretty positive move for GDX, breaking out to new highs, at least intermediate highs.
Yeah, I mean, this move was, well, first a couple weeks ago, you had the advanced decline line on that. I think it was Friday a couple weeks ago. It made a new 52-week high. So that was a really good sign. And you also have in recent days GDX and GDXJ breaking out relative to the price of gold. I think GDXJ to gold broke to a 14-month high. GDX to gold broke to an 11-month high. So that's really encouraging. You look at the silver stocks against silver, they're following similar patterns, but they're probably a month or two behind where the gold stocks are relative to gold. So you have those factors, and this is the real sweet spot when miners tend to really outperform the metals. So this is after the first big move in a new bull market, or I should say after the first correction. You have the first big move and correction. It's then after that where you're in the real sweet spot for miners, and they really can strongly outperform the metals. And if you think about how this translates fundamentally, gold's been consolidating for a few months, and it was able to hold 2,300. And even at that point, when there was a possibility that gold could break below 2,300, investors at that point could still think about, well, I'm going to use 2,000 or 2,100. That's a reasonable price for valuing these companies. But now gold is closing in on 2,500. Even these higher cost projects that have all-in costs of 1,300, 1,400, 1,500, I mean, those are still going to generate some significant cash flow. So, I mean, it's a master of the obvious comment, but I mean, it's earlier this year, we're looking at gold breaking out 2,100. Is the breakout going to hold? Now we're looking at 2,500 basically, and everybody knows gold's in a bull market, a new bull market, and so there's a lot of room for the companies to run, and especially if you get that move to 2,720 or even 2,900 or 3,000 in the next 6 months or so. Some of these companies, I mean, they're going to be generating some serious cash flow. And that's, I mean, you see these companies that produce 100,000, 200, 300,000 ounces. I mean, that's some real extra money that these companies are set to make in the coming quarters versus last year.
Yeah, maybe even last quarter, as we will start to see some majors releasing earnings starting next week. Jordan, anything on the timing of this rally? Starting off the second half of the year very strong. It was the start of last quarter that also the markets were moving strongly. Any historical references to this or general seasonality?
I'm not a seasonality guy, and that's because when you're in a real bull market with precious metals, we've seen them have really strong summers. So I don't think that the seasonality really matters much.
Doesn't that speak to it, though? As you said, in true bull markets, it doesn't matter. Summer has been a good time.
Right, right. Yeah, you're right. As far as the end of the quarter, at the end of last quarter, the Bears, there were some chances. I was fearing, are we going to see a big dump in gold at the end of the month and the end of the quarter? And gold was able to hold above 2,300. Then I thought, okay, well, at the beginning of July, maybe we're going to see the Bears try and take it below 2,300, and they failed. So I think after they couldn't do it at the end of the quarter, at the end of June, and then again at the beginning of July, then the Bears, they lost their power, whatever they had left. So I think after that, and then you got a couple of big moves in gold, and that kick-started everything. So I don't know if that answered the second part of your question, but that's how I see the end of the quarter and the start of this quarter. I mean, are there any good historical comparisons? Well, that's something I've been thinking about the last couple of days. I am going to look at how have miners performed after these breakouts. I'm looking for some hard data. But and the thing about this breakout in gold is it's so different from the other breakouts. I mean, I would say the most similar one is maybe '05 to '07, but this is just we haven't seen anything like this breakout where it's a breakout of a 13-year cup and handle pattern, and the handle was a consolidation for over 3 years. Like, this is not just one of the run-of-the-mill breakouts historically, and there's only been 6 or 7 or so. So I think with the way the stock market is trading, I still think this is similar to the mid to late 1960s. We'll have to see. Maybe the early 70s, there could be some similarity to that period. But this is a really good setup for precious metals. I mean, and the last question is, are we going to see a bear market and a recession in the next 12 months or so? Because if that comes in, that opens the door past 3,000. If not, and if we see the stock market trending higher for another year or two, I think that will slow gold's mojo at some point.
Well, Jordan, just to that point, you just put out a video earlier this week and you titled it Gold Breakout. This warning signal is approaching code red. And you were talking about the yield curve steepening and it's about to uninvert. And then sometimes that is a signal that a recession is about to start. So, to the point you just made, what are you seeing on the yield curves in the interest rate market? And then also, how could that signal the potential coming of a recession?
Well, the 30 to 2-year yield curve, actually in the last 3 cycles or so, that has tended to lead the conventional 10-year to 2-year spread. So that the 30 to 2-year, I think that has already uninverted, although it's hanging around 0 at this point. So as far as steepening and uninverting, we really need to see a strong move above 0. If it goes above 0 and it hangs around there for a couple months, I mean, that's not enough to really signal a recession. But if you get a clear move above 0, and what that basically means is you're getting rate cuts. So, I mean, the market's already priced in a rate cut in September. So if the Fed cuts in September, and if they have to cut after September, it's this thing where they have to start doing these cuts, and it's not just, well, we're going to do one cut and wait and see for 2 or 3 months. If it's the former, then you see the real steepening in the curve and the real recession signal. So I tend to think it's just a matter of time. We're really close. And the interesting thing to me is the steepening in the curves. You look at the last 3 instances, that's exactly when gold has really started to strongly outperform the stock market. So that's why it's really important to watch here and now, because it could be, not only is it a recession signal, but it could signal, or I should say, if it occurs, it will signal the start of gold really strongly outperforming the stock market. And there are some historical instances where, you get the steepening, you get that signal, but maybe the stock market doesn't, it can keep rising for a couple months after that point. So it doesn't necessarily mean everything's going to dump immediately, but it's certainly a big warning sign for the economy and stock market.
Jordan, what about this concept that why can't gold and the stock market go up together? Kind of like they have over the last almost 2 years. You look at gold's major run here from that October, November low in 2022. Gold is up over 50%. But you look at, let's say, a gold to S&P ratio, it's pretty much flat. So gold and the markets have gone up together. Could that not be almost a more sustainable environment where if people make some money in the stock market, well, they can also make money in gold and everybody can benefit rather than the stock market having to crash when, again, in the last couple of years, we've seen both move very nicely together higher.
Yeah, I don't think that's going to continue just because you're not going to see gold get to 3,000 without some turmoil in the stock market, in the economy. And this recent move has been driven by Fed easing. The market is discounting the Fed starting to ease. And so if we're going to have a soft landing, then you're not going to get a real bull market in gold. Maybe gold goes to 2,700 or 2,900 and then it peters out because you have a soft landing. And then gold, the cyclical bull market is over at that point. So I mean, that's the key thing that's changed is this move has so far been driven by the likelihood or the near certainty of Fed easing at this point. And if the Fed has to ease significantly because the economy is going into recession, that could take gold to and through 3,000. And eventually around that time, at some point, you get a bear market in the stock market and you get a recession. But I don't see any way where gold can go to 3,000 and hold it based on, or I shouldn't say based on, but go to 3,000 and hold it. And then the stock market and the economy nothing is going to change at the same time. I mean, there has to be money coming out of the stock market to really propel gold, I think, to 3,000, but also through 3,000. It's just, you're not going to see it continue. Now, I mean, I mentioned the mid to late 60s earlier. That move from 64 to 68 in the gold stocks, they strongly outperformed the stock market. So I don't know, maybe you could see some scenario where the stock market kind of fizzles out, but it doesn't have a bear market, but gold's strongly outperforming it. I mean, I guess that's one scenario, but you look at the real bull markets, the real secular bull markets, the 2000s and the 1970s, gold was strongly outperforming the stock market and the 60-40 portfolio. So, that you need to see the stock market crack if you're going to have a real sustainable, real bull market in gold. Otherwise, this is, just a temporary move like you had in 2016 or 2018 to 2020 or, after COVID.
Well, in all fairness, this move's closing in on 2 years now. And again, 50% higher for gold. Even while the markets have gone higher, clearly a lot of people are making money. What about down to the juniors then? If you think that there needs to be a crack in the stock market for gold to truly push higher, wouldn't that restrain some investors saying, I don't want to go into the small cap stocks? That seems too scary to me. Even though gold is running higher, maybe I would just stick to the major stocks. Or on the flip side, rate cuts, markets doing better, even small caps starting to move. Why not buy some smaller gold stocks if all small caps are doing better? How do you balance out what drives the juniors?
Are you talking about, when you say juniors, are you talking about explorers and like sub 100 million market cap companies?
Yeah, the small companies.
Yeah, it's a really good question because they are correlated. There is some correlation there.
They're high risk, right? So you want investors to have that high risk attitude.
Yes, there is some correlation there because they are more correlated to the credit cycle than larger juniors and the seniors. But I think at the end of the day, I would say they're most correlated to gold and silver and how gold and silver perform. So I think if gold and silver are performing really well when you're going through a recession and a bear market, I still think that some of those smaller juniors I think they'd be more affected, I should say, or more impacted if you have very strong trends in metals prices and the seniors and the larger juniors. If all those are performing well, then I think that helps the smaller juniors more than a recession would hurt them. Because if you think about, they haven't performed that well in the last year or so with the stock market going up. You're not having a recession, but metals prices have gone up at the same time. I think you need to see metals prices really continue to perform and then really outperform, because when they outperform, that opens up more money coming into the sector, and eventually that money is going to filter down into the exploration companies and the juniors. I just don't see how you have this continuation of, oh, well, gold's going up and the stock market's going up at the same time. There's no new money really coming in to the sector, or not enough money coming in where it's going to filter down to the explorers and the juniors as a whole.
Yeah, that is a good point, right? That money does need to filter down, but who knows? Maybe it comes out of those money market funds because people get paid less for their savings, but that is also a process, not a quarter point cut or even a half or 50-point cut is going to change that whole narrative. It's an interesting discussion to have either way. I think investors should be celebrating the fact that they can make money in a wide range of different investments right now, and especially for the precious metals investors, when it had been such a bear-like market in the stocks, that has clearly changed. So now it's the time to, I think, enjoy some of the gains and make sure you're in some of the right stocks. Jordan, it's always great chatting with you. Thanks for your time today. Hopefully we'll chat again next week. I hope you have a great rest of your week.